Hello traders, Gary Wagner here just after 12:30 in Honolulu, 5:30 in New York. It is Wednesday, December 20th, 2017, and this is the Daily Report for Gold and Silver. Nice upside action in the precious metals markets with gold trading almost $5 higher, closing up $4.90 to $12.6910. Of course, we do have an active long position in the market, and we'll discuss that along with our exit strategy as we pull up our charts. Silver up above $16, $16.24, net change of 8 cents on the day, and that's all within light of a fractionally unchanged US dollar, actually trading down 0.07 points, 92.95. Now, the tax bill was passed in the Senate today, and we saw US equities as a whole softly trade lower on the day. 24,726 in the Dow, that's off about 28 points. A 2-point drop in the S&P at 2679, a 2-point drop in the Nasdaq at 6962. Now, major downside action in Bitcoin today is Bitcoin Cash, was released into the marketplace itself, and that has caused a flurry of activity. When we look at the CBOE's futures contract off $6.10, $16,090, and $16,470 over at the CME, which is a net change of $1,730. Traders, on each and every day since we hit on an intraday basis these lows at 1238, gold prices continue to ascend. The greater the confirmation we are getting on a technical basis that in fact we have seen a key reversal, a V formation, which we can easily identify in gold pricing. Gold is currently trading at $1268.80, putting it up about $4.60. Typically, you will get either the inverted V at a top of a market or the V formation at the bottom of a market, specifically in gold, as this market runs through a trading range. Other types of bottom formations can be what is known as a rounded bottom, and a rounded bottom can be witnessed right here, in which it takes more than a single day for price recovery or price action to reverse. Now, in the case of this rounded bottom that happened between October and November, it had a rounded top, which signaled the conclusion to the rally. It wasn't very much of a long-lived rally. It simply took pricing from about 1266 up to 1300 that came in on these highs. But nonetheless, a V formation as price action bottoms and a key reversal takes place in gold is a frequent occurrence at tops and bottoms of gold's price range. Of course, this affects us in that we are currently long gold. We are long from below this particular price point. And in terms of our exit strategy, we are looking at a couple of key areas in which we could, in fact, find some real resistance. The first real resistance point that I believe that we will see is about 1283, with another at approximately 1302. Now, in between that particular price point, we have one more hurdle to overcome, and that is the averages, our 200 as well as our 50-day moving average. Now, we have current price action just at or slightly below, maybe by 10 cents, the 200-day moving average. You can see that by virtue of the fact that you cannot see the red tab that is just behind this green tab, and that is the price point for the current 200-day moving average. 1277 is currently where the 50-day moving average is fixed. But I don't expect any major resistance at either of these price points, and the first level of resistance I think that will hit, should the market continue to rise, is going to come in at around 1280. And as I said over the last couple of days, our exit strategy wants to look at these two price points, 1300 and 1283, as potential resistance points, and if we see real resistance come in, should the market accelerate to that price point, that is where we would look as our first target to exit our current trade. Now, as far as silver is concerned, for those that are trading silver as opposed to gold, we certainly did identify a key reversal last week. However, this key reversal rests somewhere in between a V bottom and a rounded bottom in that it was a multi-day recovery, this of course being a daily chart. But we also talked about different resistance areas because unlike gold, the 200-day moving average is above the 50-day moving average, and both of those averages are quite far from current pricing in silver. We still need to see silver go quite a ways until it's able to overcome these particular moving averages, which puts it in a more bearish light. We do have some real resistance coming in at around 1634. High of the day was 1632, so just shy of that. Currently, we have silver trading at 622.50. Above 634, our next real level wouldn't come in till about 1671. And traders, lastly, I do want to take a look at Bitcoin futures. Currently, we are looking at a intraday chart. Each bar represents 4 hours of trading, 240 minutes of the CBOE Bitcoin. That is the single Bitcoin contract. And to say that there's been some volatility would be an absolute understatement. With Bitcoin futures opening up a week ago Sunday at roughly $15,000 per coin, that's down here, quickly rising above 1,800, then falling back. We had the market trade and track above 20,000, 20,400. This on the 17th. From there, we watched the market go in a matter of 2 days from about 20,000 down to these lows at 15,600. And Bitcoin futures are currently down about $130 at 16,570. The kind of volatility that we are getting in this market, I believe, is due to a couple of things. One, it is the first week in which futures are trading. Secondly, we do have inherently thin volume in that this contract has just opened for trading, and even thinner volume because we're going into a holiday weekend. Nonetheless, we are starting to develop somewhat of a range and should, over the next week or so, at least going in towards the end of the year, have enough data to track the peaks and valleys of this particular market. Because I believe that Bitcoins are in a bubble. There's absolutely no doubt. It's where will the market go to? Where will it peak at before we get that big tumble and crash? Have we seen that when the market went to 20,000? It's possible, but personally I don't think so. But we've got this market all over the board, and as this future contract matures, my sense is that we will see these crazy peaks and valleys diminish or contract and develop a real trading range. Tax relief was certainly delivered, this according to the House and Senate. It will now go to the President for final signature or approval so that that can be implemented before the end of the year. And we should begin to see what net effect the tax change or reform is going to have, because realize that this law has only been made public, or this legislation has only been maintained and been released over a very short period of time. So it's going to take a couple of days for that kind of all to work out in the system. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.